First, I want to thank all of you for showing up, and I already know you're going to show out. This is a seminar hosted by MG Residential, um, top real estate team in the area for sure. We'll get into some of those numbers and what we base those things on later on. But why rent when you can buy? That's what we're going to discuss. But before we get too deep into that, I wanted to give some announcements, just a few things that we're hosting here in the near future. We have a digital food drive going on supporting the Capital Area Food Bank. You can connect with me later on. I think, are you going to put the link in the chat? Okay, I think
yes, I'll put the link in the chat as well.
Oh, you already did?
Not yet, but I will.
Okay, perfect. So the link, you can donate to the link, or you can connect with, contact the team and bring some stuff by our office, whichever one is most convenient. 'Tis the season, to be philanthropic and assist people with their holiday ventures for sure. The next slide. MGR holiday event, we are doing a private showing of Home Alone at RFK Stadium. It's a drive-in, drive-up. And attached to that, we're also doing an ugly sweater contest where you can take a picture of yourself and or your family in your ugly sweaters and send them to the email listed below. Contact us at mgresidential.com by December 4th if you're interested in participating. So December 13th at 6 for the drive-in movie, and ugly sweater same day at the drive-in movie, but send your pictures in advance to contact us at mgresidential.com. Transforming lives, careers, and communities through real estate. This is the mission. This is the mantra. These are the reasons why we host these seminars. This is why we're in this business. This is why we're here. So take that with you, pull your phone out, screenshot it. Something that you will see on a regular basis, especially if you're dealing with us, if you're dealing with an agent and this is not their mission, this is not their mantra, you might want to find somebody else to assist you with your transaction, because this is what we do. This is what we live by. This is like the Bible to us. Next slide, please. About MG Residential, as stated earlier, top 1% realtors nationwide. Over $1 billion in GCI, just gross transactions made, over 3,000 transactions in this area alone. We have a commercial and development division under our umbrella. 15 years of direct experience, full service team. We understand the local market, pricing, comprehensive marketing strategies, transactions, transaction management, you name it, we got it. I don't know who that guy is, but he looks pretty cool. You can follow him at close.with.chris on Instagram. You can DM me if you have any one-offs or just random questions that you may have. I'm sure I can answer them. And one thing about it, I'm not ashamed to say I don't know the answer, but because our team is so robust, I can get the answer. So follow me and let's connect. Let's get this show on the road. Rent versus buying. Should I? I want to make this interactive. I don't want to just talk. So if you're here, turn your video on if you're willing. If not, jump in. If you have a question, you can put it in the chat, or you can just blurt it out. Just let me know. I'll stop at any time to address any questions. So, rent versus buying. Should I? Let's take off. Owning now makes sense. Simple mathematics. Can somebody tell me why owning now makes sense?
I heard the interest rates are low.
You heard the interest rates are extremely low. Absolutely. Historically low, to be exact. Should I have a client right now with like a 2.475 interest rate? Interest rates affect your monthly, like your mortgage, You know, the lower you can get it, the lower your mortgage would be. Hopefully, you know, it's a fixed mortgage. So, you know, I'm sorry. You see the character walking past me in the background. That's my son. But yeah, interest rates affect your monthly payment, your principal and interest. So yes, that's one reason why owning now makes sense. Can somebody give me another reason why owning makes sense?
One that I use all the time is I think Anthony has told us a few weeks ago. Just DC has, you know, one of the highest rate of returns, and you know everything in DC and around DC kind of follows suit. So it just makes sense to own.
Yeah, absolutely. I mean, in general, it really doesn't matter where you are. Owning is something that you should do. I mean, just to build that generational wealth. And I'll get into a couple slides later on where you can actually like see the numbers of the net worth of, you know, someone who's renting versus an individual, a family that's owning. It's a substantial difference. The numbers are going to blow your mind. And yes, here in DC, there's a 10% year over year increase in your investment. So, I mean, you can do the math on that. Whatever your purchase price is, 10% increase in value year over year. That's like unbelievable. Take me to the next slide.
Before I do that, we have some comments in the chat box. We have stability, we have assets, and rent can be your mortgage.
Fact. Stability. Yes. I mean, leverage. That's what I think about when I think about stability. You know, the option to leverage equity and actually gain something from your monthly payments. I mean, essentially you're paying yourself. Assets, absolutely. That's what a home is. It's an asset. Once again, an asset is something that appreciates or has the potential to appreciate. Rent can absolutely be your mortgage. More purchasing power, for sure. Thanks, Asher. Yes, especially in this area. I mean, it's so easy to rent for $2,500 or $3,000 a month, where, I mean, essentially that's a $350,000, $400,000, $450,000 home that you're renting. You know, so it's just about connecting with an agent or connecting with a lender, then connecting with an agent and allowing them to coach you. Which is why I said to, I don't remember her name, Shaylin earlier, like it's never too early to begin your process, to begin your pertinent conversations. So rent versus own calculator. This is just an example scenario. Say your estimated selling price is $450K and you have a 10% down payment, typically for a conventional loan. So you have $45,000. Your total loan is $405,000. Okay. That's what your lender is actually allowing you to borrow. Now that $45,000 as your down payment is considered a credit to you at the settlement table. So your property is still worth $450,000. Plus, if it appreciates, your $45,000 down is your skin in the game, and now your total loan is $405,000. So your monthly payments. This is how you start looking at these numbers of owning versus renting. You have principal interest. That's your principal and interest rather. So that's your mortgage. Right there, that $1,847. And once you add taxes and insurance, okay, that's an additional, based on this $450,000 number, that's $333. If you have an HOA fee, you know, and assessments, which depending on where you stay, depending on where you're moving, you know, you may be in a rural area. I mean, there's so many different options which we can come through later on, but HOA fees aren't in every community or every neighborhood. So that may be something that you can X out. But for this example, we have an HOA. Your total monthly payment is $2,482. Now, while renting, you're renting for $2,200. It's $282 less than what your mortgage would be, right? So now let's get disciplined. You go out and parlay with, you know, your homegirls or your homeboys every other weekend, right? You probably spend $150 every weekend that you step out, that's your mortgage payment that you could be paying yourself essentially. And there's no benefit. So in renting, you're assisting your landlord if it's privatized, or your whoever owns your whatever business owns your apartment complex or whatever. You're assisting them with their generational wealth. You're assisting them with building their portfolio out. When the mission should be, no, I want to win. Like somebody pay me. I want to be the landlord. Like I want to be the bank. So I mean, the owning versus renting absolutely has. I mean, they don't even compare. To be honest with you, it's just a matter of beginning those conversations, speaking to the lender to figure out, well, look, what is it that I need to do in effort to make my home buying purchase as soon as possible. Take me to the next slide, please. Don't wait to buy real estate. Buy real estate and wait. Can somebody explain that? Can somebody put that in layman's terms? Can somebody make that a little more simpler than what it actually is right there? Don't wait to buy real estate. Buy real estate and wait.
Definitely, yeah. I think basically that's just saying, it's a sure investment. No matter where you come in at, it's definitely just going to appreciate it. And again, especially in a market like DMV.
Absolutely. Look, comb through your finances, get a financial advisor, or an auntie, an agent, whatever the case may be, somebody that's doing something that you want to do, and begin to pick their brain. Allow them to, put you in the right direction, point you in the right direction. Now is a great time to purchase a home for a low price. Home prices in the U.S. have risen 3% to 6% every year for the past 20 years. And that's a trend that's likely to continue. So we just explained that DC has a 10% year over year increase, where the US average is 3% to 6%. So your investment is likely to grow. I can speak from experience. My family, we purchased a home in Upper Marlboro in 2017 for like $340,000. And right now, today, I can get $450,000 if I sold it. So you're talking what, $110,000 in equity, and I haven't paid down that much. That's just what the market has done, So of course you need to strike while the iron is hot too. So now I have the opportunity to pull $110,000 from my home and then say, you know what? Either I'm going to purchase more rental property, or I'm going to invest in a business of sorts. You have so many options, and that's where that leverage piece comes in. Take me to the next slide, please. Just spoke on it. Interest rates are currently low. And that means everything. I say a year ago to date, you weren't getting anything less than a 3.4, 3.3 interest rate. So for things to be in the 2.3, 2.4, 2.5, that point it matters for sure. This means that you can own a home for less than what you're currently renting. And based on a scenario a couple slides back, it's a $200 difference for you to actually pay yourself. And that's situational, of course. Because you can always be pre-approved for, and we'll get into pre-approval, but you could always be pre-approved for, say, $450,000 and purchase at $300 if it's suitable to you and your lifestyle. Like, you don't have to max out, which is a conversation that you should have with yourself and also your agent, whomever is representing you in the transaction, and your lender. So what are you comfortable with from a mortgage perspective? So this is what you pre-approve for, but I don't want to pay more than $1,500 a month because I don't want to be house poor. You know what I mean? So let your lenders know what it is that you want to pay a month, and then they can give you what your budget should be, what your investment should be, which essentially determines how much house you're willing to purchase, how much home you're willing to purchase. Take me to the next slide.
Hey, Chris, quick question.
What's up?
Hey, like with these interest rates, and this may be a better question for like a lender or something, but can you possibly like afford more home with lower interest rates?
Can you possibly afford more home with lower
Like,
interest rates?
Could you get approved for more home with like these like super low interest rates? Like, I guess where they give you a higher amount, that you know of?
I can't answer that. I can't answer what, I mean, like you say, that's a lending question.
Right.
I don't necessarily see how the interest rate would affect that, because your taxes are still your taxes, your income is still your income.
Right.
You know, that
Right.
doesn't affect the interest rate. It just
Right.
really affects, you know, how much your monthly payment is going to be, your term, you know, things of that nature. So if I had to answer, honestly, I wouldn't think that it would affect how much home you could buy.
Right. That just came to mind when you was talking about that. Okay. Thank you.
Okay.
Hey Chris, I'm sorry. Before you move on, I do have a comment. On the when you say the mortgage will be maybe possibly in this scenario $200 or $250 more than the monthly. I mean the mortgage. So the mortgage is being $250 more than the monthly. You know, your monthly without building equity, just renting. The other thing that I would say is that take into account, like for me, I know I still live in an apartment, but I also pay parking. Parking could be included in those HOA or condo fees or utilities. I mean, given the situation.
Okay, I got you. I appreciate that. Tax deductions. And great question, Marcus, because I mean, it took me right into, you know, the tax piece. You know, owning a home means that you could be eligible for tax deductions. You can deduct the interest you pay on your mortgage from your taxable income. Prince George's County has one of the higher property taxes in this particular area. I own a few properties in this area, so I'm speaking from experience. But the tax deductions work in my favor every year as far as filing taxes, because I'm paying so much in escrow to taxes that you're able to claim that essentially. But of course, if you're paying $2,500 in rent, you're just paying $2,500 in rent. In your mortgage and taxes and everything else, like that payment is broken down into different compartments: principal and interest, taxes, HOA, etc., assessments. So once again, it'll be in your best interest to be able to reap the benefit of getting some of that money back on the back end, which you don't get that option to do in renting. New homeowners with recent home loans tend to get the greatest tax benefit. Feel free to DM me anything. We can talk about that. Marie Claire, I didn't even know she was here. Hey, Marie. Real estate taxes. Real estate taxes are deductible, providing great benefits to the homeowner, which we just discussed. So, are you still renting? Has anybody left to purchase a home since we've been on this call? I think you should. I think you should start having that conversation really seriously. It's just the best thing that you can do. So, we decided to, majority of the individuals on this call are renting. So I wanted to walk you through the home purchasing process. I felt like it was only right to kind of embark and go into a little more depth on what that looks like. From the outside looking in, I don't know what it looks like. So we want to give you just some insight, you know, from a real estate professional standpoint. So step one, you decide to buy the home. You make the decision. Shaylin said that she's looking to buy in first quarter of 2021. So she's already made the decision. Okay, when I'm looking to buy, you hire your agent. Your agent has a fiduciary responsibility, fiduciary duty to negotiate terms and assist you in purchasing your first home, second home, whatever the case may be. Oftentimes, that relationship grows into a lifetime relationship. If somebody has done a great job assisting you in your home purchasing process, oftentimes you want that cycle to rinse and repeat. So you find yourself referring friends, families, family members, whatever the case may be, back to them because they did such a great job. Determine your home buying needs. What are your specs? What are you looking for? Do you want a single family? Do you want a townhome? Do you want a condo? Okay. Do you know that attached to condos are normally condo or co-op fees? What are you willing to spend? Then you connect with a lender, secure your financing, figure out who has the best programs to assist. Okay, first time home buyer, can you get with Maryland Mortgage Program? Can you deal with connect with some of the first time home buyer programs in the DC area? And the lender can put you on to all of those things. And I know we as agents with MG, we're well versed in some of those programs. So we can probably give you some insight too on what that actually looks like. From there, we begin searching, find a home, visit homes, scour the market, peruse what's going on in the market, see how competitive it is, see how long homes have been staying on the market. I know right now it's hot. I don't really see anything staying on the market for for more than 10 days typically. It's what you call a seller's market if you're not aware. This is where there is more buyers than there are inventory available. So most homes are pretty much in multiple offer situations, meaning that they're accepting or agents are writing or they're receiving rather 4 or 5, maybe 10. I spoke to an agent the other day who had 20 offers on one home. He had to present the entire 20 to his client, comb through it, sift through it to figure out which offer was most conducive or the best offer for his client. I just got beat out on an offer today, unfortunately, right before this call. I came in third and we submitted a super strong offer. So you got to allow the professional to talk to you about what's going on in the market to dictate and determine or assist you in what you need to do to put your best foot forward. So that's that making an offer piece. That's where the professional comes in. That's where we come in to really guide you. You negotiate the contingencies. Typically, we do that with our client, to figure out, okay, well, look, do you need any seller concessions? Do you have a savings that you're willing to, does the market even permit that? I know that, let me back up a little bit. Seller concessions are typically where the buyer is asking the seller to contribute X amount or X percentage at the closing table to assist you with the purchase, which is typical. But in this market, seller concessions they're like non-existent almost, because in effort to submit the strongest offer possible, you almost have to ask for nothing, because somebody's going to ask for nothing, which means that they're submitting a stronger offer than you. So it just depends on really how strong of a buyer you can be and showing your agility in your offer. Okay, so now contract is accepted. Did you have any contingencies? Maybe you did an inspection contingency. Okay, maybe you want to get that inspection done within 7 days of contract being ratified or contract being accepted. Now you have that window where you have to get that done. Everything goes through. I work with a transaction coordinator. I think our team pretty much works with transaction coordinators. So the transaction coordinator kind of gets you from contract being accepted, and they walk you through the entire remainder of the process. Final walkthrough, you do with your agent. That's just checking the property's condition. Were there any contingencies? Were there any discrepancies in the inspection? Did anything need to be fixed that was negotiated, between you and the seller? Let's go and do this final walkthrough and or re-inspection to make sure that all of the things that we asked that they agreed to, I guess, fixing or completing was actually done. Once you settle, transfer of title, it leaves the seller. Now it's yours, the buyer's property. You prepare to move in, we keep in touch. And hopefully we continuously build that relationship, rinse and repeat. And then it's on to the next. Your next home, or your next investment. And you reach back out, hopefully, or shoot a referral, and we do our due diligence to put you back in the best situation possible. Any questions there? Okay, cool. It's also a rational decision. Home is where your wealth is. This is the slide that I referenced earlier. What's up? Oh, I thought somebody chimed in. I'm sorry. So grow your wealth via equity buildup, debt pay down, tax deductions, which we just spoke about, value appreciation, which we just spoke about in a property that I own in Upper Marlboro, financial net worth comparison according to the U.S. Federal Reserve Board of Consumer Finance. This is where it gets good. So your national average net worth of a renter is $5,200. Your national average net worth of homeowners is $231,400. That's substantial. When I saw these numbers, I was almost like, what? There's no way. But renting, you don't have any leverage. You're not building the wealth. You're not building any wealth. If you decide to move, you just move. You close out, lease ends, or you buy yourself out of your lease, and it's on to the next rental or whatever the case may be. When you sell your home, when you decide to move and you sell your home, you actually get back what you invested. So that's why the average net worth of homeowners actually makes perfect sense. Any questions there? Why, that's a huge disparity. Absolutely.
Yeah, it's alarming. I'm sorry. That alone would make me want to buy.
For sure. Take me to the next slide. So in the hiring your agent process, why do you need an agent? And then we'll get into the new construction. I think I'm going to start there. Why do you need an agent for new construction? Typically, there's a community that's being built in an area that you desire, right? And you can go in and the builder has a representative there and they can walk you through all of the ins and outs of their model home, or, they can show you all of these things. But your agent can make sure that you choose the right builder. Some builders give concessions or rewards, if you will, at the table if you use a certain lender or whatever. They all have different, scenarios. So you definitely want to make sure you choose the right builder. Your agent can guide you with location and neighborhood that's conducive to where you want to be, etc. Your agent will make sure that all of your paperwork is in order. The worst thing that you would want to do, because in reality, the representative for the builder works for the builder. Like, they want their business to win. They want their builder to win, their boss, their, whoever strokes their check, they want them to win. If you go in there with no representation and you're unfamiliar with what contracts of sales look like and, the different innuendos and nuances that's attached, you could get worked over. So it would be in your best interest to have someone represent you in that transaction. And also take into consideration, you don't pay your agent. That does not come out of the buyer's pocket. That comes from the seller. So why not find a friend, phone a friend, for somebody a professional to assist you in that process. Same reasons on the other side, why you need an agent. Agents know what to look for. There's certain words and terms that might be in a listing that you're unfamiliar with. And then even when you look up the definition, it still might not be clear. So to have a point of reference is a beautiful thing. Agents negotiate for you. Going back to those contingencies, going back to, man, it's a fan in there that they're taking, but you want it. I mean, simple things like that. You can negotiate everything in a contract. Your agents have your fiduciary responsibility to put you first, which is, that's ethical. It's unethical for your agent to not do that. They will always fight for your best interest because your best interest is theirs. Agents pay attention and know the details of all of the paperwork that you would need to complete. I know, especially in our sales team meeting, I've had individuals on the team say, yeah, paragraph 4 on page 1 of such and such, and really run it down for you. And I'm like, oh. So now I know it because I go straight to it. And that's how we spar with each other and help each other build. Once again, the perks of having an agent on a team is the leverage. So if you are working with me and I have a hiccup in my schedule that isn't conducive to your schedule, I can call Marcus Moore, who just so happens to be my team member, and ask him, hey, can you take my client out tomorrow? Are you available on this day, in this time? And if not, I have 11, 12 other individuals to leverage to show you a property. You don't get that when teams aren't involved. So that's always a plus too. Find an agent that's on a team so that you can be cared for at all times. Thank you. Working with your buyer agent. Buyer agents are strategic throughout the process, and they should educate you on the market. One, I need to rearrange my camera because I can't see that. I'm sorry. Yes. So educate you on the market, one, which we just kind of digressed on what's going on in this particular market. Analyze your wants and needs. Figure out what you're actually looking for. How much home are you? How many rooms do you need? Are you cool with a single car? Do you need a dual car garage? Is your mother-in-law coming and you need a room in the basement? Like, all of those things matter. So they have to analyze your needs, assisting you in finding a home that essentially fits your criteria. I don't want my commute to be over 25 minutes. Okay, cool. So now on the map, we can keep you in pocket to what's going to get you where you need to be from point A to point B in X amount of time. Assistance navigating special financing programs. I'm not going to put you on the spot, but we have an agent on here who actually just bought an investment property for herself, and she has directed the team on a couple different programs that works in, especially in the DC area. But once again, you have Maryland Mortgage, you have you have a plethora of different programs that's readily available. So contingent on your lender, contingent on your financing, which government backed, whether it's FHA, conventional, all of those things, there's certain programs out here that can assist you in closing costs and things of that nature. So number 6, coordinate the work of other professionals needed. So once you go into contract, I advise everybody to do a home inspection, whether it's for informational purposes only or, an actual contingency. I refer clients to lenders. We refer clients to lenders, appraisal companies. Typically, your financial institution is going to order an appraiser to come out to make sure that a lender isn't going to give you more money than what a home is worth. So it's in their best interest to have an appraisal come out and make sure that home is, priced properly. We have preferred title companies that we use, termite companies, all across the board, just reputable partnerships that we have with different organizations and businesses. The negotiation, contract home inspection items on your behalf. That's where, we got the inspection back and they say, oh, well, this needs to be serviced and that needs to be fixed. We go back to the seller, we go back to the listing agent and negotiate all of those terms. And backtracking to the process, the home buying process, that's where that re-inspection and or final walkthrough is vital, because you got to make sure that those things have been taken care of, and receipts should always be provided by the seller, proving that that said things were done. Be a bridge with your lenders. I know oftentimes my clients, they reach out, oh, my lender said X, Y, and Z, and I don't really understand what that means, but your lender is also working with 100 other clients and they're not always readily available. Have an educated, well-versed agent on your team, on your side, to assist you with those one-off questions. Okay, well, what does this actually mean? What is escrow? What is this percentage? I mean, whatever your questions are, you always want your agent to be a bridge to assist you. So by the time you actually get in contact with your lender, you already know what's going on. Solve any problem that you want them to solve, any problem that may arise. And I can't even see what's at the bottom. Can you pull that up a little bit? What's the last bullet point? Oh, referrals, accountants, attorneys, etc. Yeah, referral accountant. So, I mean, whatever you got going on, whether you are an investor, you just need a title company, or you need a probate attorney. I mean, there's so many different scenarios why some of these tools or I guess professionals may be warranted. You can take me to the next slide. Excuse me. The mortgage and title process. Any questions? I feel like I'm just talking. Any questions there? I don't see anything in the chat. Oh, builder reps are representatives. Thank you, Lashika. But yeah, the mortgage and title process. Funding your home purchase.
Chris, I have a question. I think you mentioned, I think it's a great idea. You mentioned about work with a builder and having representation. And you also said that, you always encourage your clients or advise them, or recommend that they should get a home inspection. Would you recommend that for new construction as well?
Absolutely. I would recommend a home inspection for any purchase. I mean, at the end of the day, there's people that's building these homes, and you can't take the human out of human. Like, there's mistakes, there's things that happen. So just because it's new construction and someone never lived there, who knows that the sump pump is functional? You know what I mean? So you want to have an inspector come in, a professional come in and test those things out to make sure that everything is fine and dandy. Granted, all of this stuff is going to be under warranty and etc., but you don't want to get in there and run into something that you had no idea wasn't functioning properly. And you don't want to you don't want it to stop working outside of your warranty time, because then at that point it's on you, when in all actuality it should have been on the builder. So hopefully that answers your question. I suggest a home inspection for every purchase. Yeah,
thank you. Especially not wanting that liability. Yeah.
Definitely.
Hey, Chris. So from date of contract, from ratification, once you're under contract to close, like, how long is that process? Did you say that already? I'm not sure, but how long is that process?
Right now, between 30 and 45 days from date of ratification to close. I've been seeing 30 more consistently than 45, but things happen with underwriting and title, abstracts and things like that. So sometimes it may be extended. And some people are actually doing like contingent contracts on the selling of another home. So they may need to sell a home before they can actually purchase a home. So, there's so many different variables there, but typically between I would say between 30 and 45 days.
Okay, thank you.
So funding your home purchase, the pre-approval. Well, before I even get into pre-approval, does anybody know the difference between a pre-qualification and a pre-approval? Can someone speak to that? Or what do you think that is?
I feel like for a pre-qualification, it's just like a kind of like a soft inquiry in a way, in terms of the credit. Like it kind of just gives you a broad of, hey, this is how much you could possibly qualify for, as opposed to a pre-approval is that you actually go through the paperwork process of, getting your credit checked and getting your debt to ratio, income numbers, checking all that, and you come to an actual solid number as to what the lender will actually give you for the purchase of your home. So pre-qual is really not solidified, and pre-approval is more like, okay, this is real.
Absolutely. You want to be pre-approved. You want to have your income verified. You want to have everything, your DTI verified. You want everything to be verified prior to going out. You never want to go out with a pre-approval, and your agent shouldn't allow you to go out with a pre-qualification, and your agent shouldn't allow you to go out with a pre-qualification because the proof isn't in the pudding. Like they haven't dug deep. They haven't combed through your finances thoroughly to make sure that you can actually afford as much home as you're looking to purchase. So,
Hey, Chris. Oh, sorry. Real quick, you said DTI. What does that stand for?
your DTI is your debt to income ratio. So how much do you owe versus how much you're actually making. So, your debt to income, that's a pertinent piece of purchasing a home. Because if you have $1,500 in miscellaneous expenses, then a lender's not going to give you a mortgage for $3,000 if there's no way that you can afford the two. So that debt to income is a vital component in the home purchasing process.
Oh, thank you.
So first step, pre-approval, we just discussed. Underwriting, that's when they actually begin to, after contract is ratified, this is when they begin to really comb through everything, verifying what you have going on financially, all of your income, how many jobs do you have, how long have you been on those jobs, can you prove it, have you filed taxes in the last 24 months. They want to see everything in effort to make that transaction as seamless and make sense for the lender. Your lender is the one that's taking the risk. I'm loaning you, it's the largest purchase of your life. I'm loaning you thousands of dollars in hopes that you can afford it for 360 months. After they dig deep into that, that's when your loan is approved, your financing is approved. Now, title company begins their abstract search and to figure out if there's any liens on the property or if taxes have been paid and, things of that nature. So title securing. And then once all of those things are done, funding is secured and wired to where it needs to be. And transfer of title, now it's in your possession. Now it's up to you based on the underwriting process. They know that you can afford it because the loan is approved. Now you just have to be responsible and do your due diligence. Why pre-qualify? One, a pre-qualification letter is required to present an offer. A listing agent wants to know, okay, well, can this person afford this particular home? And without a pre-approval letter, which you'll get once you go through all of those steps of turning in your taxes and things of that nature, your check stubs for the last month and all of that, it's like, hey, I need to know if this person can actually purchase this home. Because typically it's a Word document, right? Anybody can create it, can create a pre-approval and say that it's a go. So it has to make sense for the seller also. They want to know where you stand financially. Interest rates drive your payment, and the power of partners, just the relationships that we built with reputable lenders in the community, in the area, who we connect to they're service providers. They assist our clients 8 days a week. But I also want to say this. You don't have to go with one of our preferred lenders or any agent's preferred lender. You can go to your financial institution. You can go anywhere, anywhere where you're comfortable. It's your decision. Just make sure you get all of the paperwork. Make sure you get that pre-approval letter. And typically your agent should have some type of a line of communication with your financial institution, with your loan originator, because they're going to lean on each other throughout the transaction. So you always want to deal with somebody who can be touched on a Saturday or a Sunday. Say we're out on a Saturday and your bank is closed, but you want to write an offer. What do we do? But you also don't want to give your full hand because you're writing on a property that's $330,000, but you're pre-approved for $400,000. So you want to get a new pre-approval letter that states that you pre-approved for $330,000, not the $400,000. You never want to show your whole hand. Just a trick, just a rule of thumb. So you want to have a lender that's actually accessible every day, all day. And those are the perks in going with one of our preferred lenders, because we've built that relationship. You can take me to the next slide. Find your dream home. Just take the steps. You can go to mgresidential.com right now. It's connected to the MLS and it updates frequently. Search your homes, figure out your spec, figure out what you like, connect with an agent on our team, make an offer, go into contract. We'll take the rest from there. You will settle in 30 to 45 days. It's on you. We've already kind of discussed the property inspection. I'm sorry. We've already kind of discussed the property inspection, financing approval, homeowners insurance policy, things like that. Thank you. Property inspection, pretty much exposes, if you were asking, okay, well, what's actually done in a property inspection? They're looking at the ins and outs of your home and the functionality of it. Is your water pressure right? Is your hot water hot enough for, industry standard? How's the structure? How insulated are your windows? And they literally comb through your entire home to make sure that it's livable and readily available. In the car world, they call it a lemon. They don't want you to buy a lemon of a home. Like, they want your home to be as functional as possible. It's a small investment. Home inspection typically costs between, say, $350 and $500, depending on the actual service provider. So it's a small investment, but it has a lifetime impact. So once again, this is why we suggest in new construction even do a home inspection, because you can't take the human out of human. Financing, approval, and appraisal, which we've kind of already discussed. The appraisal is typically ordered by your lender, and they just want to see that home is worth the amount of money that they're lending you. Of course, you're going to have to get homeowners insurance and things of that nature for, just to protect your loss against any damage, flooding, things like your home may be in a flood zone. You love the home, but it's in a flood zone. They're going to require you to get flood insurance, to cover your behind. It's only beneficial to you. You can take me to the next slide. Do's and don'ts of home buying. What to do? Get pre-approved. Check your credit. Keep an eye on your credit. Continue to pay down debt if you have it. That's that debt to income, the DTI. Expect a final credit check prior to closing. What not to do? If you know that you're in the market to purchase a home, don't go buy a car. Because that's going to affect your purchasing power. That's going to affect your DTI. And also, don't quit your job. I would almost suggest not even get a new job, because that could also make it difficult for you to purchase. Like, they want to see tenure. Lenders want to see, a year or two on one particular job. Contingent on what that job is, of course. Like federal employees is a tad bit different from what I've seen. They work for the federal government in one state, but they may be transitioning to another state, still with the federal government, but the agency changed. But because it's still the same umbrella, it'll run concurrent. So it just depends on what your expertise or what your profession is. So any questions on what to do and what not to do? Anything need to be, I guess, clarified? Okay, great. You can take me to the next slide.
Chris, I do have a question. I'm
What you got?
curious. So based off what in terms of the large purchases, like what would be, I guess, like because if you're looking to buy a house and yet you need to say get a new car soon within that time period of looking to buy a home, what would be a good time frame to get that car before to get one or the other?
I would say hold off. I would say hold off until you close.
Yeah. Okay.
I would say hold off until you close. I mean, and typically there's a window of opportunity there because it takes a cycle for it to actually hit your credit. So if you know that you can afford what you can afford, but the lender may have a discrepancy with it, purchase before you actually before the home hits your credit. But after settlement, transfer title, get it in your name, make sure it's yours. And the onus is on you at that point. Hopefully, you care more about where you live, the roof over your head, than the car that you drive. So now you got to make a financial decision for what's going to be conducive to you and your family.
Gotcha. Cool. Thanks.
So now we're at closing. Congratulations. It's the last stop before home ownership. You do that final walkthrough to make sure that everything checks out. Closing preparation is already, done with financing approval and the title company doing their due diligence. From there is transfer of ownership. It's yours. Nothing else to talk about. Just write a referral because hopefully whatever agent assisted you, they did an amazing job and it was seamless. Also understand that in that home purchasing process, there's some things that your agent just can't control. So, multiple offer situations and getting beat out, that doesn't mean that you have a bad agent. That just means that the market is super competitive and this one might not necessarily been for you. Somebody came stronger. Let's go to the, and this is just the Minkiti Group additional service. Early on in the presentation, I expressed that, we have property management services, we have investment opportunities, and we have commercial real estate services. We have a whole commercial arm, a commercial division in our operation. So, I mean, just some of the perks of working with, a team that's in the top 1% of realtors in the country. Multifaceted. And, we have a plethora of different skill sets on our team. So there's never a question that will go unanswered, for sure. You can take me to the next slide. There's some community partners, nonprofits, things like that we contribute to. I'm not going to go too deep into that. I want to open the floor. I know we don't have much time left. Just want to thank you for joining us. And if you have any questions that I missed or, anything, if you're not confident enough to answer or ask those questions on this platform, feel free to follow me and ask me directly. Once again, I'm not afraid or ashamed to say that I don't know something. I have an abundance of skilled professionals on my team that I'm certain I can get that answer from. Any questions?